What's up, Market Hustle community? Today we have JR from Stock Sharks joining us. He has a platform with over 1 million followers, and they put out quality research for investors every day. Now, before we get into this episode, I want to be clear. This episode shows you what active research or active investing looks like. This is not what I think most people need to do, especially if you're just getting started. If you're just getting started with investing, or you don't want to deal with the headache of deep research, simple index funds like F.68 or VT will do the trick. But for those of you who are curious about what it actually takes or looks like to find undervalued stocks before they pop off, JR breaks down his thinking process that he goes through behind the scenes. This episode will show you what it looks like when you take active investing seriously. So let's get into it. All right, we have a great one lined up today. We're actually bringing on a special guest from Stock Sharks. His name is JR. He's the brains behind Stock Sharks. But before we actually welcome him on, let's go ahead and check in with our lovely co-host. We've got two of them today. Bafi, unfortunately, is unable to join, but he'll be on in the next one. Let's start with Pierce. Pierce, how are things going in sunny California?
Beautiful. If you're watching this, you can see it's beautiful 75 degrees on January 29th, which is awesome. Other than that, no, not too much. I just recently got a new job. I'll like to, dive into maybe the next podcast, but I've just been enjoying life and hanging out. I'm super excited for this podcast. That's for sure.
Love it, man. Yeah, I know. Looking, if you're just listening in your car on Spotify or Apple Music, Pierce has a nice sunny background. He's got the whole tropical trees in the background, while half the country is kind of freezing with these winter record temperatures. So enjoy that, Pierce. That is the sunshine tax in California that you're paying for. So I guess it's well deserved. Fernando, how are things going in Florida?
Good man. Just like we always say, just putting every rep in every day. Yeah, I think I don't have the temperature that Pierce has in Florida. We've been impacted by that Arctic thing going on and back and forth from New York. New York is frozen right now. So yeah, but doing good, man. Just focusing on day to day.
Love it, man. Yeah, I checked, what was it, yesterday? And I think New York was at like 5 degrees.
Yeah.
I'm like, all right, that's brutal. So and you're going to New York soon, right, Fernando?
Yeah, I might be up there this week. Probably. Yeah, I go out there every other month.
That's quite the transition from Florida to New York.
It's super close too, so easy.
Good stuff, man. Well, best of luck with that. Well, cool. Let's dive right into it. Let's go ahead and welcome our special guest today. We've got JR from Stock Sharks. He runs a platform of over 1 million that provides quality research to investors. I followed his page for quite a while, and it's always nice to kind of see what they have going on research-wise. But hey, JR, welcome to the Market Hustle podcast. It's really great to have you here. And I'm always curious, like, let's start off with this. Like, what kind of inspired you guys to start your platform? I'd love to get some insights around that.
Hey Josh, and thanks for having me on, guys. Big fan of your guys' podcast, and yeah, it's a great question. So, what started Stock Sharks, like I was telling you guys in the pre-show, was it was sort of a hobby between me and my partner, where we were very, very early in terms of being one of the first financial pages on there. I have a background in banking, working at a few different banks here in Canada, and Shiraz has a real estate background and an extreme marketing background. So just by the universe putting us together, we were able to combine what we're both talented at, and we built a pretty solid business out of it.
Awesome, awesome. Well, I think this is going to be a great episode to have you on because we're going to cover some of the high-level dynamics at play in the markets. So I'm looking forward to this episode. Let's just roll right into it then. So, in 2026, there's quite a bit of geopolitical dynamics moving around, and one of those big hurdles or maybe even worries for investors is the tariffs, right? It's like the word tariff and even the threat of tariffs is being thrown around all over the place. And of course, if you're listening to this podcast for the first time, the stock market does not like uncertainty. And one thing tariffs kind of introduce is a hell of a lot of uncertainty. So maybe JR, if you want to help, maybe give your insights. Let's start with the guest. If you want to give us some insights of like how you see the tariff dynamics at play right now, and maybe like what one thing you're watching at from an investor's perspective.
Yeah, so the main thing I watch with the tariffs as because it's a very complex situation with
Hmm.
how the tariffs they're changing on, off, on, off. The rates change, the percentages change, and the politics of it all changes the entire dynamic. So the thing that I pay attention to the most in terms of tariffs are the volumes within the market. What names are reacting the most? What names are having uncertainty volume or unusual volume? And try to take advantage of that. In terms of the overall premise of tariffs, as I mentioned, it's a very difficult thing to understand. But how I've approached it since what was it, April 15th last year was what would they call Liberation Day, right? Since
Yeah.
that, I did a lot of panic selling. Kind of made a mistake and sold some names very early, and I regretted that. So I learned from that mistake and started using the dips presented in the market to make allocations, and that's sort of what we've been doing this past week. To start the year, probably the most aggressive we've been on our research side in terms of buying dips and sending out alerts to buy different names. So how we view it with the whole tariff perspective is either it's 1922 or 1929. So for you stock market nerds or historians out there who like to pay attention to that, 1922 to 1929 was the run up. Now I'm saying we're either at the start of that or the end of that, right? And the main reason for that is in 1930 there was a key policy that was enacted, which was called the Smoot-Hawley Tariff Act in 1930, which raised U.S. import duties with the goal of protecting American farmers and businesses from foreign competition. Sound familiar? Right. So a lot of economists say like the Great Depression was amplified because of that policy being enacted. But the difference is now is we have the internet, the companies who are leading the market, especially in terms of AI front and AI spending. These companies are not in debt. These are massive. These are the biggest companies in the world. And tariffs have actually so far have seemed to be a net positive for a country that's 38 trillion in debt, and that could potentially offset it if they thread the needle properly, if the Supreme Court rules it legal. A lot
Yeah.
of ifs and a lot of ifs and a lot of ifs. So it's a complicated thing to understand. So how I approach it, I look at it like that. We're either at the start of 1922 or we're at the end of 1929, and you got to prepare. But the way to see through that is by looking at volume metrics, from tape flows to option flows, and taking advantage of that to see where you can win out.
Okay, so JR, let me just kind of summarize how I'm interpreting this. It sounds
Mhm.
like you're kind of watching how the market's digesting the news and kind of what's going on.
Absolutely.
Okay, cool. I think that's awesome. Can you help us understand like maybe your investing style just for people listening in? Like,
Yeah,
are you more active investing or are you more long term or do you have like a hybrid approach?
no, it's a great question. So we do a mix of both. We obviously have our long-term plays and mega cap names that we like, but with Stock Sharks, we the whole thing that gave us an edge, especially on competition on our in our research department, was not focusing on the big names. Everyone knows to
Yeah.
buy Apple, Meta, Microsoft, and all these names, and providing an extra opinion on that is just kind of like screaming into the void, right? There's so many people doing it. So our approach to things is we like to look for the undervalued mid cap sort of plays, but eventually can those companies become part of that dynamic? And we like to invest on a theme. So just to give two examples without talking too long, our last two big winners were Palantir. We bought that at $6 and $10, and that was part of an AI theme. It was a mid cap at that point. So obviously not now, trading where it is. And that was in 2021. The next theme after that was space. We bought a company called Rocket Lab, ticker RKLB. We bought that at $10, $4, $6, a whole bunch of times, and that thing rocketed up. It trades, I believe, like $86 now. So we like to find a theme. We like to find something that could be a clear-cut winner in a space that's, there's not really a monopoly. Can it fit into its toughest competitor? And we try to win out on that front.
Question for you, JR. So we
Yeah.
have a lot of beginners that are getting into investing, right? And
Mhm.
a lot of the question that comes up when they're trying to get into investing, it's kind of like what you're asking, right? Like what you're saying, where they're kind of focusing on what company to invest in when they're really early. So like you said, Palantir and all these companies where at that point, at that time, they were, early in the game, and then they became something, like a mid cap or a large cap company. How does somebody that's starting see that between all these different IPOs or companies that are coming up?
That's a great question. And that's where deep research becomes a very, very, to me, important thing. I have been following Palantir since around probably when we started Stock Sharks. And it's kind of funny because I read this book called The Prince of Risk. It's a fictional book. It's like, but if you read it, you're like, how is this not a movie yet? And Palantir was mentioned in there. I learned all about it. When I started working in finance, I was finding every way to possibly get invested in the IPO. So I think you have to really believe in a company. You can't just open Robinhood, open the motleyfool.com, find 10 stocks that fit the theme that you like that you heard on CNBC. Like, no, it can't work that way. You got to really believe and find and go through and pick these companies. So as a beginner, what I would recommend to people, look at what the pros are doing, right? One of the things I like to do is called clone investing, right? Is looking at what hedge funds are doing, seeing what the smart money is doing, and start there. Start to see what they're investing. Doesn't mean you have to buy it right away, but take your time with it because there's always going to be opportunities in the market. The market always presents it, right? You don't want to be the guy buying the IPO because it's on TV, but the stock drops 60 days before the
Yeah.
lockup period, right? And which we've seen so many of that. If you look at Figma, I believe they're down 75% since their IPO. And Figma is a stock I was excited about coming to market. It was on our IPO radar for 2 years, but the moment we saw the valuation, we didn't even bother. Now it looks interesting to me at $25.
I think it's interesting, right? So, JR, can you help us understand like maybe how much research you guys do a day? Like,
Oh,
is this what you're doing? Like, is this like your main gig? Like, you're constantly
so
digging into companies?
absolutely. So a lot of people get like a little confused with stock search because we have a large following on social media, and they think that's all the business is. It's like, yeah, we do have an advertising department for our business, but what started and drives the business is our research. We've published so far 11 different research reports this year, stemming from robotics overview. We did a tariff. Which we were speaking of tariffs, we did a whole 11 to 12 page breakdown on tariffs, history of tariffs, how they're working, and in all the ramifications of the volatility that it brings. So we do a lot, a lot. I would say it's a full-time job doing it, and that's what people pay us for is because we not everyday people and the everyday investor has the time to do that, to pay attention to companies, to listen to their earnings calls, to read 10K filings, to read all of that. To me, if you're putting your money into something, you got to know all of these things, and it's very important to do so. It's like buying real estate. You're not just going to go on Zillow or Open Door, look at the price of a house, buy. I mean, some people probably do, but buy it without even looking inside to see how the infrastructure is. And that's how I treat stocks. We do a lot of deep research. We look through at least 100 companies at least a month, and we sift through and try to find five, six, seven good ideas. And maybe if we take that, and that's to me, if you take the market serious and you want to be a serious trader or a serious investor, you have to do that work. Otherwise, you're just gambling.
Yeah.
You can get lucky gambling, but it's no way to make a living off of it for sure.
It makes sense. And I asked that question particularly because we do have lots of newer investors who listen in, and our goal with the Market Hustle is to be transparent with the process. And of course, like I'm a huge fan. Like I do have an active portfolio, but I would still say a majority of my long-term investments are just in simple ETFs. And for
Yep.
one, I think most investors should go that route. However, I'm also not the person to say like, hey, if you have the ambition or curiosity to dive down the rabbit holes and learn and be more active, like people do really well if they are willing to do the work that's required to do well. And that's why
Well,
I
eight out of
appreciate you.
10 day traders fail, right?
Yeah, exactly. And I appreciate you kind of sharing the process of like what it takes to kind of have, I guess, if you want to call the edge of being ahead of the market. It's like if you want to be ahead of the market, like you're going to have to do a lot more research than the average investor who's just kind of mindlessly scrolling on X or Twitter looking for some
Yeah.
mainstream insight that's pretty much already been digested by the market. So really cool to kind of hear your process behind the scenes. My next thing is like more so around what would you say is like the key skills or the key
Yeah.
insights that have helped you a lot as an investor?
Great question. There's a few. I would say passion is one of them. You really got to want to do it. You really got to want to dig through and find things. My wife always says I'm like a detective when I'm looking through these companies and trying to find what I'm looking for. And I would say that is having and also the ability to learn, be coachable. I think it's very important to not act like you know everything. One of the main things, like when I first started in finance, I watched a few movies, read a few books, read a few things online. I thought I knew everything, only to be humbled very, very quickly. And once you get through that humbling, you get very in tune if this is really for you. And once you take it seriously, you do it. So I think, yeah, being focused, being passionate, being coachable, and the ability to learn every day will do wonders in terms of the process to find, different investments and be a better investor.
I want to ask around going a little bit back to where we started, right, with the tariffs. What we've been seeing is a lot of investors have been kind of embracing for impact every time there's a new tariff coming out or a change randomly in a night, right? From not even the market being open, we find out that tariffs are going to go up on a certain country, which at the start of Liberation Day, it was a hard hit for the market, but now
Mhm.
it's becoming a pattern as to now we're seeing the market dip and people are getting a hang of this
It's
in
called
a way.
the taco trade, right? The
Yeah,
Trump always
yeah.
chickens out.
So how do we like, how are you guys researching this, right? Like, how are you positioning yourself or helping others in your audience or with your customers, like, position themselves better to hedge against that? Because we don't know tomorrow, it's going to be another country or what's going to happen with tariffs.
It's a great question. And it's very difficult to do that. Now, in terms of like hedging, we don't really do too much, like options trading in terms of like buying puts on protection on names and whatnot. So we stick to our strategies. We like to stick to our themes and we like to stick to what we know. Um, is because there's tariffs going to be on French champagne tomorrow. Am I going to go look through French companies and try to find which one's going to win? Probably not. That's a little bit crazy to me. But one trade I wish I took was it. Did you guys see the French president? He wore those shades at the World.
Yeah.
Okay, the company that makes those shades, their stock went up $70 on the Italian stock exchange. Or sorry,
Wow.
70%. So like stuff like that would have been fun to find. But yeah, in terms of preparing for tariffs, we stick to a theme. We'll find a theme for the year. We like to make it like one, two, or three. For this year, we're focusing on mergers and acquisitions, consumer discretionary, and technology. Obviously, technology can be very broad. So, but we're going with self-driving, robotics, and AI. But with that being said, like we stick with what we know, we stick with companies that we know and we understand. And if they're affected, we'll know right away and make a decision. Is it time to get out and sell? For example, I'll give you an example. Software companies are bleeding right now, right? You see software just getting completely crushed this past couple of days. I've had the intuition just from watching volumes to pretty much we sold out of 5 to 6 software names before we started doing our new year buying. So, and I'm happy we did because some of those names have pulled back dramatically. Now they look interesting to reback buy in. But from, just sticking to what you know and seeing, like for me, I'm a strong believer in the tape doesn't lie. Do you guys watch tapes like level two data and tape flows coming in?
I don't know.
Okay, so for me, I've found like you guys heard of technical analysis, like people who do like
Yeah.
charts and stuff like that. To me, technical analysis is like astrology for men, right? Like women
Okay.
have astrology and whatnot. I feel like coming to try to come up with a pattern, and this is no offense to anyone who does technical analysis. It just doesn't work for me. I like to watch the actual money come in. What is there going to be more on the buy side or a sell side today? What's driving the stock higher? Okay, so we saw this news in the tariffs. The stock is starting to sell. Why is it selling? Oh, the volume is 2 million to the sell side here. Okay, we have an idea of what's happening here. Okay, now we watch it for 2 hours. We start to see the volume flow start to come back in. Maybe it's this a dip buying opportunity. Things like that. That's how we prepare and sort of protect against those situations. But a lot of the companies that we're in are kind of away from the whole tariff situation. I mean, we're in a Chinese semiconductor company. I'm going to talk about it later when we get to it later. They're up 57% this past like 3 months that we've been in them, and they've completely avoided and skated through tariffs because there's a super cycle happening in that current theme. So that's why I think there's the power of theme investing, but you can't just go out and buy everything in the theme. You got to figure out which one is the right one for that moment.
Okay, I like that. I like how it sounds like you go into this like an investigator, right? Where you're going
Yes.
in and not only as an investigator, but you're sticking to the areas in the investing world that you actually have done deeper research and understand more fully. You're not getting distracted, or the mistake I see is people get reactive, right? Where they hear something going on that they don't fully understand, but it seems like everybody's making money, so they run towards it, right? And then by the time you kind of end up in that situation, almost always you might be too late because if
Yeah.
FOMO is driving your investing decisions, That's usually kind of a top cycle in the different areas of the markets, especially when it's mainstream on social media. But
Well, and it's hard too, especially if you attach yourself to a name, right? Like I've been in this scenario so many times. You buy a stock at $8, it goes to $4. A bunch of people are hounding you. You start second just guessing yourself, and then a meme stock it goes viral, and everyone you know made 50 grand on it, and you're questioning yourself. You're questioning yourself. Why did I do this? Why didn't I buy that? Why didn't I buy that? And you sell early, right? And then 3 days later, the same stock you sold just got acquired by its competition. It's up 86%. So it happens to everyone. I think the main thing a lot of people need to wrap their head around is you're in control of yourself. You're like your life is your own reality show, right? You direct it though. You can direct the mistakes that you make. And I have lost so much more money, guys, selling early in stocks than I have at selling at a loss in certain positions. So sometimes you got to hang on to names and sometimes you got to cut bait. Just make sure you know which ones and make sure your conviction. Remember why you bought a stock. That would be my main reason. If you bought it because of
right.
someone on Twitter, maybe cut bait.
So I have a quick question regarding what you said, 10 minutes ago about 1922 and 1929. I
Yeah,
think many people are going to drastically overlook this. I've been thinking about it the same way. I really want to hit this because this is how people make generational wealth or lose generational wealth. And how are you guys strategizing your portfolios? How has your research been impacted? How have your thoughts been impacted during your research to kind of I don't know, not predict, but like kind of brace for impact in the sense with because I do believe stuff's going to hit the fan. It's just when, like you said,
yeah,
between 22 and 29. I believe
yeah.
that. So I want to hear your opinion on this. What are you guys doing to, kind of help this?
Well, the main thing we're paying attention to would be there's a lot of things, right? You have to pay attention to politics, but I think also too, when comparing to 1929, and we're almost practically 2029, we're only about 3 years away from that. 100 years later, is the fact that technology is so different, right? That was sort of around the first industrial, second industrial revolution. We're headed towards sort of, some are saying the fifth and sixth industrial revolution now because of how fast AI has moved. So I like to, separate the two. In terms of what to pay attention to, I think the thing that would, set it off would be a major financial collapse. Now, I thought that possibly could have been when FTX or Silicon Valley Bank, both those companies that those went under. But as we saw, nothing really happened. So it's really tricky because are we in the fifth inning? Are we in the first? Are we in the second? So I've heard since I've started investing. I remember when I first started investing, I think Obama was still president, and the main thing on the news was the debt is too high, the stock market's not growing fast enough. And now the main thing on the news now is the debt is too high and the stock market's not growing fast enough. And when I first started investing, the Dow Jones was at 11,000 and the US national debt was 18 trillion. Now both of those have gone to 1 to 40 trillion and the Dow is about to hit 50,000. So the end is always supposed to be happening, but it never does happen. So what I think would be the thing to watch for would be credit. When does credit cycles start to tighten? That's, in my opinion, the last three major recessions have always been for that reason. One thing I think a lot of people ignore into the lead up of COVID was the interest rate tightening cycle from 2018 to 2020 before we went into lockdown. Interest rates were being raised and the market was technically in a recession. Now, if COVID didn't happen and they lowered interest rates, could there have been a potential financial meltdown? I think so, because they had no other way to justify how much money they printed, and COVID. And I'm not trying to go down conspiracy alley. I'm just saying the timing all works out for that. So now, could that happen again? Yeah, that's what I pay attention to is the credit cycles tightening. For example, today in the markets, everyone's saying the markets are red because of tariffs and uncertainty and geopolitics. No, the Fed paused interest rates yesterday,
Yeah.
and we have a new Fed chair coming in potentially. That's the reason why markets are down. Market was expecting another cut, and that would ease liquidity for the cycle to keep going. But that's the reason why markets have pulled back today. And it's also the biggest earnings day of the week. You could factor all those into it too.
So sorry, I don't mean to keep on, but so
No,
when
keep going.
markets are very, volatile and stuff like that, people run to secure assets, gold and silver. How has that played? Because that's huge. That's huge right now. Everyone's talking about gold and silver. I'm curious what your thoughts are on how that kind of plays into the uncertainty of the markets and coming into, uh, you know, it's all cyclical, right? I believe history repeats itself in a lot of different ways. Humans are not
Yeah.
necessarily the smartest things, and I think that people are running back to these safe havens. And I want to see how you kind of what your thoughts on that are.
All right, so I don't think the audience will like my answer because
Yeah.
I'm not like anti-gold or anti-crypto or anything, but my views on it like this. Like imagine an alien species just like watching humans on Earth and how we use gold. We dig it up, we shine it, we put it in storage, we look at it and we say it's worth something. Now, I know there's other use cases for gold in terms of, technology and people use it and whatnot, but to me, I'm not an expert on it, so I personally have no opinion on gold, silver, and whatnot. Now, do I trade it? Do I trade miners? Do I pay attention to those sectors? Yes. Mainly from a mergers and acquisition standpoint. I'm looking at it as like a land grab. Which mines can get acquired, which ones could not. I really have been trading a lot of copper mines over the past couple of years because I just see that in a cycle. But I like to stick with what I know and I don't really know those markets fairly well. Every time, I'll give you a prime example. I was in this gold miner called Kirkland Lake Gold. They eventually you know of Kirkland Lake. They got acquired by Agnico Mines. I was holding them during from 2017 to 2020 into that COVID period, and it sold off. And I'm like, this is my protection play. Like, I thought this was supposed to be like saving me when the market crashed. So I mean, it's a great company, great stock. I stick with what I know, and I don't like to complicate it with that part. And yeah, it's like you said, everyone's talking about it right now. I get at least 50, 60 messages a day. Hey, what gold? I'm like, it's too late. We missed it.
Yeah,
No,
I
but
think
that
I think it's like a world, like a global thing moving gold at this point, right? Because dollar is weaker and it's
Yeah.
weakening more and more, and it's a world shift. We'll see where that takes us. Like you said, my opinion on gold, I think it's very volatile right now, and Bitcoin considered the digital gold is also, going down instead of shifting up. So there's like a trade-off there between like physical assets and digital. But yeah, I'm gonna lean on what JR said. I think Pierce probably knows more because he actually has, gold
Pierce
gold
Pierce
stock
is
and
our
silver
silver
stock.
guy. He's got a
Yeah.
quite a bit of silver, but
He's the gold bug of the group.
yeah. But JR, I would actually agree on your end. Like for me, like I would rather own businesses because they produce value, right? Like they can actually not only do they produce value, they're providing services, providing goods and whatnot, but they can adapt, right? Like if the currency itself changes, like if for some reason we decide to swap to the gold standard, it's like these businesses can adapt to that, right? Like they can still continue
Well,
to do
I,
their
I feel
thing.
like those talking points, right? Like you always hear that in the news, right? Like gold's up right now, silver's up. People are like the dollar's failing, or we're gonna start using our currency in dollars. It's like, okay, like I've heard this story before. Like in
It's not new.
26 in 2016, China was supposed to launch a currency called the petro yuan, and that was supposed to kill the US dollar, but it didn't happen. So I mean, like the US dollar is backed by like the military. I mean, you
Yeah.
guys just kidnapped the president. No one did nothing about it.
That's
So I
right.
mean, like, you know what I mean? Like, think the dollar will be fine.
I
I,
think so
I
too.
I made a post today actually breaking down the top 10 countries by gold reserves. And funny enough, the country with the most gold reserves by a wide margin, you want to take a guess what it is?
Yeah, it's
United States, right?
Venezuela.
It's the United States. It's like they have
Uh,
the
Thank you.
highest gold reserves in the world. So it's like
absolutely.
in the worst case scenario, if we swap to the gold standard, it's like which country is going to benefit the most?
Yeah.
Something to
Well,
think
it'd
about.
be an economic disaster if that happened.
Oh yeah.
It would definitely.
Oh
And that
yeah.
this is all worst case scenario thinking.
Yeah.
And I think, and JR, that kind of brings me to my next question is like, you're pretty deep into social media, like kind of watching how things are going.
Yeah.
And you're also an active investor. And so I'm sure you've dealt with the having to be contrarian and seeing the masses have a certain opinion and you
Mhm.
knowing that maybe it's not correct.
Yeah.
Um, can you give some insights to people who are following, who are on listening to this podcast and want to be more active in investing, but still get caught up in the masses of like what the mass opinion is and have a hard
Yeah,
time taking a contrarian approach?
for sure. Don't go with the popular opinion. I mean, don't be a sheep. Don't be a sheep in the crowd, right? Like for me, I read two newspapers every morning. Not the newspaper, the digital print version of it. But this is how I formulate my opinion every morning. Is I read the Financial Times and I read the Wall Street Journal. You say that nowadays, people will be like, "Oh, the Wall Street Journal is left wing. Well, Financial Times is right wing. Whatever, whatever. Who cares? Read what you think works. have your viewpoint on the world, and don't change your opinion. Like, you obviously change your opinion, like if different information presents itself. But if you know something to be true and you know it's right and you stand to benefit from it, why would you let someone else, wear that opinion? Like, I don't know if you guys play sports. I'm a big basketball, big football guy. I played college basketball, big football coach back in my day. So if I know a play is going to work, right? I know we have a mismatch, right? We could run a pick and roll alley-oop and score it every play. And then someone on Twitter goes, "Well, actually, you guys should be shooting more threes." Like, no, no, like that doesn't make any sense, right? So it's like if you believe in something and you believe it to be true, right? Like I believe, for example, this one stock we bought this week, Decker's Brands, ticker DECK. They sell Uggs, those Uggs that women buy. They actually probably just reported earnings now, so we'll do a live reaction to see if I was right on the trade. Let's see how the stock did. If it's down, this will be funny. It's up 14% right now. Okay, so the stock just went up 14%. We bought it yesterday. My whole thesis was wintertime, Uggs, Christmas, sales. Makes enough sense. You know what I mean? If you believe it, it works, right? So, like, if you believe in something, you buy it, make it make sense, right? So, you guys got to see a little live thing, right? So, we bought Deck yesterday. We actually put a YouTube clip out the stock that we think that could rebound the most this year. And I think Decker Brands could be that one. And it's completely out of my wheelhouse. I mean, I'm usually trading technology, IPOs, or things like that. But I'm like, the fundamentals add up here. Uggs, Hawka brand. Yeah, let's do this. And boom, it was right. So that's a good one to see. But yeah, I have a ton of different ways of approaching that. Is mainly just like, don't let outside opinion deteriorate you. Like I had a similar trade last year in Nike. Bill Ackman sold his stake in Nike, so I was like, okay, we buy it. Now, Bill Ackman's a way smarter guy, way richer, not comparing it, but he's been a good guy to counter trade when he files that he's stock, because when he sells, people buy it up. So it's like a good little trade to make there. And we traded Nike's earnings very well last year. So same thing with Deck, right? So it's like, you believe in it, it makes sense, go with it. Who cares? That's my
Oh,
thing. Is nothing
okay.
wrong with being a contrarian, and there's also nothing wrong with believing in yourself.
How would you say people need to, we live in AI world. People are kind of stuck into their chat GPTs and they switch from social media to their chat bots. It could be
Mhm.
chat GPT or other bots. What would you say how they can leverage that, right? I think you read the journal, but how can they leverage because chat GPT, I don't know if it could be biased or not. How do we know the information being provided? Because a lot of people probably ask the same question that everybody has asked. What's the best
Yeah.
stock to buy? What's going on tomorrow? What's the Fed gonna say? And
Yeah.
is that, like how would you say people should leverage AI? Like how are you
Well,
guys
okay.
leveraging AI?
Okay, so that's a great question. I'll answer it in like kind of like three staggered parts. So in terms of like with AI, right? Like with ChatGPT, I we were on as at Stock Shark, we were on ChatGPT, I think like 30 minutes after it came out to the public. Like we were
Wow.
on it so early. Like even there was a message I had from one of the members on Stock Shark. He's like, dude, how did you know about this so early? Because that's like how focused and like how much we pay attention to stuff. So like I don't think there's anyone I know that uses Chat, Gemini, and Claude more than me and Shiraz. Like we use it for a lot of things. A lot of things. It's actually we were able to do layoffs like a bit because it just became very helpful. Like we didn't need as many people on the team because they're like, hey, AI can do this. So I think it's something that everyone you have to use it. It's like it's bigger
Yeah.
than the internet, right? Like I'm so bullish on AI, not just from a stock standpoint, but like what
Yeah.
you can use to leverage the tools within AI, right? I mean, just from a very simple standpoint of running a simple media page like we do, you can make banners, you can rewrite words, you could just do so much, right? Now, the next layered part of that, I'll ask your question was you're saying don't ask ChatGPT what the best stock to buy is. It's like even if it gets to super intelligence, a market is made based off the behavior of one people, the world, the environment, politics, the weather. The last snowstorm just accounted for $110 billion in economic damage. How can an AI predict that if it can't predict the weather? So don't look at it as a way oh, I have this rich tool in my pocket. Boom, 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 boom. Okay, it tells me to buy I don't know, Under Armour, which is I think is a good stock to buy right now. But we're just saying AI tells you to buy Under Armour instead of Nike. That's a little thing wrong. So I think people put too much trust in technology. don't count on it to formulate an opinion. You're a grown adult. You could formulate your own opinion.
No, great points. What I found is that it seems like AI, especially when you ask generic questions, it kind of gives you like the generic consensus around what the popular opinion is around that. So if you're
Yeah.
asking what's the best stock to buy, it's going to give you the generic answers that everybody says. Maybe Google, Apple, Microsoft.
Yeah.
It's like you
Or
get out of
what's
these.
typed in and searched the most in the market, or recommended by certified investors, or what the most institutions and institutionalized. Like AI, how it all works is super complex.
Makes sense. And JR, so I'm curious. So we've seen a lot of doom and gloom around AI in recent months, where everybody seems to think like the consensus seems to be that it's a bubble right now, right? Like everybody thinks that there's these companies are spending too much in R&D, and they're predicting that they're not going to be able to find some sort of ROI. I'm curious to get your thoughts around that consensus opinion right now.
All those people who have that opinion never worked in business, right? They not, and I'm not trying to say I'm like an expert on it or whatnot, but it's just very simple. The companies that are spending the most on it, is their money to spend, with the exception of OpenAI, because they are not profitable. And I think OpenAI could be the Yahoo of this cycle, but will that
Hmm.
bring the economic world down? No. Meta, Google, Nvidia, these companies, you look at their balance sheet, you know how to read a balance sheet. These companies literally print money. I mean, Google bought a company, was a cybersecurity company called Wiz for $30 billion. No one's ever heard of it. That's what Google makes in a quarter. They could spend 30 billion to go buy a company. These companies own all the most important real estate assets on the internet, and they all make tons of money through advertisement. This is not like the dot-com bubble where you got companies doing complete share offerings to pump their stock, go into debt, and bring the whole entire economic system down with it. No, that's not happening. We really had a great piece on AI, like debunking everyone's talking about circular revenue, how
Yeah, yeah.
they're circulating the revenue. Like, yeah, a lot of companies do that. You don't think Walmart's not circling their revenue with all the food providers to put into their store? Like, come on, like it just how business is done. It's just when people want a narrative to be crafted for whatever benefit that it may be, I think it's just because they missed it. They want it to be a bubble so the stocks can crash, and they think if the stock market crashes, they can buy cheaper and everything will rebound. Well, that doesn't work like that. So I think that we're not in a bubble. Famous last words, right? Like could be tomorrow. Trump comes out and says, I declare the stock market AI bubble, right? Just my luck. But why I say that is because I made a comment on one of the first podcasts we did. I said I thought OpenAI would never do an IPO, and then 2 days later they filed for an IPO, right? So it's just stuff like that always happens to me. But yeah, I just don't think the market, just the AI bubble is now. Are there stocks that are bubbles? Yes, but the market
Mhm.
will correct that, and it's sort of doing that right now as we see. So yeah, I just don't think we're in a bubble. I think thinking like that is short thinking without understanding the full nuances of everything, the dynamism of the American economy. Now, if
Yeah.
AI company in Canada gets a little testy, yeah, say that's about. But we don't. If you guys ever seen a Canadian stock trade, you'd laugh. There's just like, is anyone here? Is anyone trading it? Like, there's just no volume on any Canadian names. It's brutal.
Jared, let's zoom in on that a little bit. I'm curious, can you give us some insights around the Canadian markets? Because like we have a lot of Canada investors who follow the market hustle.
Yeah.
So like, what are your thoughts on how things are going, especially with tariffs? Like, is there anything changing any changes you're seeing in the Canadian market?
Yeah, so I do the same approach with the Canadian market than we do US. Obviously, there's a lot more offers and options on the US market than the Canadians, but there's a lot of good value on the Canadian market. Actually, our top recommendation for the past 6 months has been a Canadian company that does automation. We think they can get acquired because their competitor got acquired. So simple thinking there. But if the Canadian economy, and they got to understand the Canadian stock market is indexed very differently than say the Dow or the S&P 500, because we have a lot of natural resource companies, oil,
Mm,
mining, lots and lots and lots of mining. That's essentially our whole economy. We barely have a tech sector. Like Shopify is our crown jewel. So you have to really know where to invest, what companies to pick, and pick and choose. To me, I like certain Canadian companies and I don't like a lot of them, but that's just because there's more of what I'm attracted to on US markets, or even on say the Hong Kong markets. Sometimes even the London Exchange has some better offerings, right? But Canadian's more very legacy, very boring, very slow, but safe. That's the key thing, right? I mean, my wife, she works in wealth management, so I kind of should be touting these things to be great, but I work in a completely different business. But yeah, the thing is, it's very, 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 very slow, boring, but you're not going to get smoked. That's the best part about the Canadian
Gotcha.
market.
Is it like bonds in a way?
Yeah, well, there's some names that do like very, very well, and they have like a very big global presence. And but the thing is, once they get so big, they just go do a U.S. listing. So the Canadian market
Okay.
misses out on that, right? There's very
Okay.
few stocks like the Quebec companies because Quebec is very nationalist. They don't do the dual listings, but every company dual list. I mean, we stock search, we moved to Texas. I still live in Canada, but we incorporated in Texas, and that's just because taxes in Canada, you don't want to know. That could be a whole other episode, but I still want to be in a good mood.
Fair enough. Fair enough. JR, no, I appreciate those insights. It's always
Yeah.
interesting because, and it sounds like your focus mainly with Stock Sharks is the U.S. markets. I mean, you're
Yeah.
you're clearly aware of the Canada markets, but I think a lot of people don't understand the dynamics of different stock markets. Like they kind of, for one, like I would say, yes, a lot of American or U.S. investors are a little nationalist and like, oh yeah, U.S. stock market is the best. But at the same time, like I think global investors kind of write that off, like, well, you know what, U.S. investors are getting ahead of themselves. It's like maybe a little bit, yeah. Like the market can get up and down. It can get pretty volatile in the U.S. At the same time, the U.S. stock market is massive, and I don't think people understand how much like capital flows through these markets. And there's a reason why a lot
Oh
of
yeah.
businesses come from other countries to list in the U.S. is because there's more room for them to grow and to get capital from investors and expand their operations. So I think there's a lot like a lot of misconceptions I see on social media are people misunderstanding how massive the US is and how much financial resources or like financial power that it has. And I think, you know, with all the tariffs going on, like whether you want to say it's good or bad, I think a lot of what Trump's doing is using tariffs as a negotiation tool to try to, prop up different parts of the US economy. And it's just kind of
100%.
interesting for me to kind of watch all those dynamics kind of play out.
Yeah, 100%. And I didn't answer your question on how the tariffs affect Canadian markets. It affects it in a big way because we're really dependent on you guys. I mean, I'll give you guys an example of how dependent Canadians are on Americans. Our military has 68,000 active people. 68,000. Think about that for a second. That's not that many people. So we're very dependent on you guys for a lot of things, and especially economy-wise. I mean, 80% of our audience is from America. From America, my business essentially doesn't exist, right? So yeah, it affects it in a very big way. It's definitely hit inflation for us in a way, but we have our own other dynamics that we have to deal with. Like we have housing inflation that you don't even, it's insane here. It's nuts, nuts. And you would think in like some areas it just doesn't add too much up. So tariffs do affect, but like you said, it's a negotiation tool from the administration. Seems to be working, but I really just think the power of the US economy, no matter, I mean, you could put a monkey as president and it's still the Dow would still go up.
It really seems to be that way. Well, us go ahead and pivot because we've talked quite a bit about.
Yeah.
I love how we're covering the different ways of thinking through market dynamics as an active investor, as well as covering the important topic of the big tariffs because that's been a
Your
huge
guys' audience
discussion.
probably thinks I'm nuts.
We've covered, yeah. JR, no, I really appreciate you coming on. Like, it's really interesting just to get outside perspectives and hear kind of how you're thinking about everything. And
Yeah, for
it really
sure.
shows the depth of research what you guys do. Because like I've only seen your Instagram, and so it's nice
Yeah.
to kind of hear the mind behind the Instagram.
I'll
Uh,
send you some of our reports after this in the email. Now I got your email. I'll send you
I
some of
love
our
it.
reports. Yeah.
But let's go ahead and pivot real quick to the semiconductors, right? Because like this
Oh
seems to
yeah.
be a huge focus for not only investors but a lot of businesses, right? And governments. For example, the U.S. government bought 10% of Intel last year back in August, and the whole reason why is because it's a big national security priority for the U.S., making sure that we don't lose domestic semiconductor production, as well as we have Taiwan being one of the global hotspots, not only for uh, geopolitical conflict between China and the U.S., but the whole reason that's existing right now is because Taiwan's one of the biggest producers of these special AI semiconductors. They produce something around, I think it's like 80 to 90% of these AI semiconductor chips. It's like, as of 2026, it seems like the semiconductor is basically the new oil, right? Like that's the resource that all these countries kind of want because it seems to be the infrastructure of this new AI era that we're kind of building out and entering in. So JR, I'm curious to get kind of your thoughts of like maybe first like how much you've kind of looked into semiconductors as well as what you're kind of thinking of these from an investor perspective.
Great question. So we actually just did a huge report on semiconductors 2 days ago. I'll add that in the email I sent you to. It's massive overview. So my story of semiconductors, right? Like I told you guys before, I stick with things I know. When Nvidia and AMD first jumped off, uh, I looked in my past taxes, right? I found out that I owned Nvidia at like $4 a share, and I sold it like so early. And like AMD, I had at like 90 cents and sold it, but I didn't know what they were. I just thought they were gaming stocks, right? So once of that, like when Nvidia became like a real player and everyone was like talking about them being the next big thing, I was like, this is too big to ignore, right? Like I need to dive in and learn this sector right away because this is big. And then once I connected the dots that ChatGPT is essentially, because I was using it a lot when it first came out, that it was essentially powered by semiconductor. If we're being very lazy when we say that, because there's a whole process that goes
Right.
towards all that. But we're just saying semiconductors are the fuel for AI, just for conversation's sake. So once I pieced all that together, I was like, okay, I need to learn everything as much as possible. So I really took about, I'd say 6 months to a year, just really learning it, right? Missed out on a lot of stocks that went up. Nvidia, AMD, the list goes on for how many semiconductor stocks I missed out on. I was just luckily that was in space and luckily to be in a bull market where everything else went up big. So I kind of got a good idea of semiconductor infrastructure. That's sort of been the theme that I've been playing and looking for semiconductors. I'm not looking for the next Nvidia. I'm not looking for the next, whatever name you want to call it. I am looking for something that's or ASML or TSMC. I'm not looking for those names. I'm looking for something that's a component within that supply chain that nobody can compete with because
Gotcha.
semiconductors aren't going anywhere. The cyclical nature of it will. There's going to be times where Meta, Google, and Tesla buy $8 billion worth of chips a quarter, and then the next quarter they don't. That's the cyclical nature of that business, right? You're going to have drastic different order changes, and that's why the semiconductors sector is so volatile. Is for that reason. So I want to be invested in a key component of that, and the part that we chose that's very like interesting part is cleaning and packaging. Cleaning and
Okay.
packaging of semiconductors. You find the right company with the technology that does it, they kind of have a monopoly in the space. And we were lucky enough that we did. And that was ACM Research. It's a company, US company, but their main business and focus is in China, where they do all the cleaning and semiconductor packaging for companies there. So for me, when I was looking and learning the sectors and whatnot, I knew there was never going to be another Nvidia. You're not going to hit a home run or slam dunk like that. Look for the infrastructure. Look for the names that could be acquired by Nvidia. Look for the names that could be merged into something. Look for the key components of technology that can't be replaced, duplicated, and is needed, right? So one reason why I chose ACMR is because very light competition and they kind of have a monopoly on their space in China. Another semiconductor stock I get a lot of questions on is Wolfspeed, ticker WOLF. A lot of people that company went bankrupt last year and there's still people wanting to buy the stock. It blows my mind. But the thing is with their business, it could be duplicated. So to me, that's not a key component within the semiconductor space. So looking for components, things that fit within the infrastructure. That's where I think the big semiconductor play is, especially for this year. I mean, I see it all in the volumes.
Interesting. Okay. So JR, I'm kind of like trying to reverse engineer your thinking process around how you're approaching this investing. And it sounds like to me, and correct me if I'm wrong, like you see where the momentum's happening, whether it's AI or whatever industry, and you kind
Yeah,
of you see where maybe you call it hype or maybe just call it the attention, like the mass attention's at, and then you kind of reverse engineer, like looking at the rest of the supply chain. It's like what businesses kind of support this this darling stock that everybody
yeah,
loves, and then you kind of go
exactly.
downstream to find the kind of underrated stocks. Would that be fair to kind of describe your approach?
Exact thinking. So, for example, like last year when robotic stocks started to go, crazy, and everyone's thinking like, "Oh, let's buy this robot stock, let's buy that." I started thinking like, what's like the eyes? What's the brain for the what company is making the eyes and the brain for the robot? And we found this LiDAR company called Ouster. It was traded at like $18. It went to like 36, 50. Then we sold at 36, but it went to like $50. So it's just like thinking like that can give you an edge. Now you could be wrong completely,
Sure.
he could be asked wrong completely, and the stock blows up in your face, and that happens. That does happen. But yeah, it also adds for a fun story, right? Like everyone's
Yeah.
looking at the next chip company. Well, we want to look for companies that are cleaning the chips.
Kind of the
Isn't there
boring
isn't
stuff that
there
people underlook or don't look at appropriately. Yeah.
Yeah.
isn't there one company that focuses on, I think I'm trying to think of the name. It's ASML,
Yeah,
where they create
ASML. Yeah.
the photolithography for the
Yep.
chips, and they have like a
Yep.
patent on their machines, and they're the only ones that have that. I think they're
Yep.
based out of Netherlands.
Yep.
And would you say that's similar to what you're talking about right now, which is a company
That's what I
that
did.
contributes uh,
Exactly.
a part into the whole, I guess, piece?
100% a key cog in the machine, essentially.
Yeah, yeah,
With
yeah,
it, that was my thinking, right? With ASML, Taiwan Semiconductor, Nvidia, the train has left the station, right? Like
Yeah.
you're not catching on to that ride. Like it's already missed, right? So no sense to try to find that. Find for something that no one else is paying attention to, but
yeah.
that is important. And that's very, very hard to do. Very hard to do. Like it's like a robotics play we had last year. And sometimes, you know what? I think it's very good to give shout outs to other people who do good research. There's this one group called Hunterbrook Media and Citrini Research. I think these guys are like some of the best in the business. They're just so dang good. They did a discovery on a company called Teradyne. I'm subscribed to their services, and they in their research they found that Teradyne's like headquarters and in the back lane backyard is Amazon's robotics department.
Hmm.
And
Wow.
at that time, they put out the report Teradyne's like $85. If you look up Teradyne stock right now, ticker TER, it's at $240 a share, right? So it's like we traded it, we sold way too early, but like man, it's just like stuff like that is where you really win in the markets, and a lot of people aren't willing to do that work. And you know what? That's why a lot of people will like sign up for services like mine because we do that work and we present it towards people. But I can't imagine having kids and work 8 hours a day, and you're going to do what? The investigative for 8 hours, like the 8 hours you get to yourself, you're not going to look at the stock market. So that's where it's like for people who like we were talking about the first subject that we're talking about, you do want to be an investor, you do want to be a trader, you got to treat it like work. You got to, allocate the time and take it very seriously because if you don't, if you try to play the market will play you if you don't take it seriously.
100%. 100%. JR, just a couple last questions before we officially wrap things up.
Yeah.
I'm curious, like, how do you guys think, or how do you think of position sizing, right? Because, like, for one, you can be right maybe about the narrative or like where things are headed, but then the market
Yeah.
could still go the completely other way, or maybe something was overvalued, or wasn't quite as undervalued as you thought it was. So, like, how do you kind of think through position sizes when you're opening something, like opening a new position?
That's a good question. So I have a few strategies that I do towards like now if I have something very high conviction, I'm kind of like the Joker with a machine gun, just spraying, right? If I really believe in it, like when Palantir IPO'd, I probably bought that stock well, like 8 times and it just kept buying, buying. Every time it dipped, buy, buy, buy. But now I don't treat every stock like that. For example, we were just talking about deck earlier, right? So the position I took in that, I took 40% of my initial allocation into that because we have earnings. We had earnings today. This was yesterday. So, but let's say if I wanted to put 10,000 in. All right. I'd put 4,000 in before earnings. If the stock goes up, I let it ride because now it's eventually going to get to my full allocation of 10,000 was going to be. So that's fine on that case. But now say the stock misses and they dip. This is what I really like to do and why I like to do the 40-60 method. Put 40 in, stock dips. Now I could buy even more shares with the money that I have aside to buy more. So that's essentially for a company like, you're trading in between earnings. That's a strategy that I would approach with one. Something of high conviction, you believe in it. I mean, are you trying to make money or are you trying to be smart? If you're trying to make money, you bet the house, 50, 55, 60%. That's if you believe in it. Now, you don't do this every time, right? I haven't done that in a while, in a long time, right? Why I've been doing that approach of the 40-60. But yeah, if you believe in something, if you're trying to make money and you're trying to change your life, yeah, you got to press it. You got to do it hard. And that's not a recommendation that, you
Yeah.
see a stock, you read something, do it. No, but yeah, if you believe in it, better damn well believe in it and hope it works out.
Would you say
So
that's more of a day trading technique, or are we going long here
No, I
with?
think day trading is overplayed. I even think that term day trading is kind of like I don't know. To me, like whenever I meet day traders, I just know when I see the person in 3, 4 years, they're going to be doing something different. You know what I mean? Like there's very, very few times that you see people doing long-term day trades, or even like I have tons of friends who've worked in currency. I have tons of friends who worked at banks, and they transition out of these trading roles because it's so stressful. It's very, very difficult. It's very tough. I
Yeah,
think market's more set up for swing trading. I think swing trading is sort of kind of like the new day trading, right?
yeah.
But sorry, what was your question? The first part of it, I just missed the part.
No, I'm saying what you say is more like day trading because I think you're talking right, you're hitting it right in like right in the head, right? And I'm one of the like active traders on this like podcast in a way. And this year I had to transition with the volatility out to being a swing trader instead of a day
Yeah.
trader. I think with the previous administration, I was a day trader in a way, kind of doing like days because the market was more predictable in a way. But with
Okay.
today's market, a lot of people are turning to being swing traders.
Yeah. Like for me, I feel like day trading, and these are just my principles, right? It's like I feel like if you're going to be doing day trading, you should be doing that focus in like the futures markets, right? With like commodities,
Yeah.
currencies. With equities, I don't really think you get the liquidity or the volatility that you'll need to actually scalp and make a profit day trading. Now, the whole meme stock and that whole volatility, like what's happening in silver and gold, crypto treasury companies. That's a whole different ball game. And that sort of stuff works for a time being. But yeah, for me, I think the stock market's prime for swing and long trades. And I think it's always been that way. For day trades, it's for me, and this is just my opinions. I just feel like the futures market is the right place to do that. Because if you're going to invest in something, like investing means for the long term. And to some people, like I hear people say 3 months is too long term for me. And I'm like, well, what are you signing up for my service for then? Like it really says in the description, the shortest we'll hold a stock is probably 6 months. Now, I'm I gotta go read the deck earnings report, but stock's looking like it's doing pretty good right now. And when you have a good trade like that, the first thing you want to do is sell. Well, then you got to remind yourself, right? So this is to answer your question, right? Like I bought stock deck at 97. I had put on my research note that I believe the stock can hit 220. So why would I sell at 111 if I still think there's $100 to go in the stock? You
Yeah.
know what I mean? So that's sort of like how I view it and how I approach the market is that you're going to have wins. You're not going to get 100% wins in the market every day. Nobody has, nobody ever will. The people who've done it, they got lucky. It's like winning the lottery or a scratch ticket. It's a very, very lucky few. You want to be in it long term, you want to be in it consistently. And I think that's the way to approach it, or at least works for me so far.
Yeah, and
Make
there's
sense?
a couple of different approaches, right? I think Josh, right? We talk about it all the time. There's a conservative approach to it all. I think a lot of people want to build the
I mean,
foundational side. Go
the
ahead.
entire thesis of the market hustle
Yeah.
is the only way you can go wrong is by not owning things. Like if you're stuck in cash and hoarding cash, that's the only way you lose. The real win is to at the very least, own quality assets through something like index funds. Like that's the bare minimum. Now, if you want to try more of the advanced stuff, like this episode was definitely more into the details and nitty gritty, but like the options there, and that's the reason why we have this podcast is because we want to hear from different perspectives, like JR, like Fernando, even like Pierce and Boffy. Like we all have different kind of degrees of how we approach the markets. And my whole philosophy is like, what better way to learn for yourself what works for you by learning from different people. Maybe you listen to JR, and you're like, all right, this sounds cool. I want to learn more about like kind of active investing and taking kind of his approach. Or maybe you listen to JR and you're like, yeah, screw that. I'm going to stick to my play. I'm going to stick to my index funds and call it a day. Like either way, it's going to help you solidify your own way of investing, which is the most important way to approach markets, in my opinion. But yeah, JR, I can't thank you enough for coming on here, man. Like I really enjoyed kind of chopping up these topics with you and just kind of hearing the way you think through markets. Really kind of lit off some light bulbs in my own head. I'd love to maybe just like one last question before we officially wrap up.
Yeah.
What are maybe like Stock Shark's thoughts on some of the most underrated stocks in 2026?
Okay, that's a great question. I want to say thank you guys for having us on and inviting us on. You guys approached us, and we really appreciate it. It's an honor, and it's a lot of fun having these conversations and doing these podcasts. And I hope people learn and take the market seriously, take yourself seriously. That's what we're all here to do. All
Mhm.
right, so underrated stocks, right? And that's I mentioned earlier our whole theme. at stock searches looking for the underdogs and looking for the companies. So pretty much that's what we write about. So when I saw this question in the questionnaire, I said, "Oh, perfect. Let's talk about the stocks we talk about every day, right? Because that's what we do. We're not talking about the big dogs or the big heavyweight stocks." So I already mentioned to you guys ACMR, right? The cleaning semiconductor company stock. Stock's up about 57%. So I think it's a little too late to get into that name. But now you want to talk about a real underdog story. I got a good one for you guys. Undervalued. No one's, you guys haven't heard of this, but I know you guys have heard of this. You guys remember Yellow Pages?
I do.
You guys
Yeah.
old enough
Yeah.
to remember Yellow Pages? You ever wondered like what happened to Yellow Pages? Right? Like they don't really, like they're not really around no more.
Yeah.
Everyone has a Yellow Page in their cell phone now, right? So 2017, Yellow Pages and like three other like old legacy companies all merged into one company called Thrive Holdings, ticker THRY. It is you guys know Salesforce?
Yeah. Yeah.
So it's like a small business Salesforce. They've converted into a SaaS company doing very, very small business merchants. To me, their stock's down, what, 60, 70% from last year. I just see value there. They're trading on par with their revenue. It's a neat story, and they have legacy business, and they're actually doing like something within tech, so that could potentially be acquired. And they have customers. I mean, you don't just do 200 million in revenue without no customers,
That's fair. That's a
right?
very interesting company right there.
So
And
that
there's
so
there's a bunch of companies like when I think when you what you're saying, there's a bunch of people are thinking like, okay, so like where do I go find this? Like,
Mhm.
like Yellow Pages, like is there a list of or a place that I go and find underdogs or underrated stocks? Like,
So that's where like the research process comes
yeah.
into it, where you gotta like when I mentioned like you gotta be willing to go places that you're not going to go. Like you guys have your apps, your tools, your websites that you're comfortable using. You gotta go look and read things that you're not comfortable reading because they're gonna form new opinions. Whether you agree with it or not, you're gonna find something interesting, right? Like
Sense.
I'm not really big into politics in terms of the left right thing, right? But you know what I love to do? I love to watch the news and see commercials. Because you know what commercials are? Commercials are showing
Mhm.
what people are buying at the end of the day. And one of my like this is not even part of the underrated stocks, but you could add it in there. I found this stock when it was $4, ticker BYRN. Burna Technologies. You guys ever heard of Burna? So what
No.
they make is
Never.
a non-lethal pistol. Their commercials are on Fox News all the time. You can imagine why. So they make a non-lethal pistol, and their stock was at like $4, and it went to like $32. I was like, so just stuff like that, and like that's
Yeah.
luck, right? But where do you find underdogs? Paying attention, right? Like paying attention, just seeing things around you. What makes sense? Oh, this is driving up. This is going higher. This is could potentially work out. This company is growing their revenues. Like for example, with Deck, if you look at their stock over the past year, down. Look at their revenue, up, especially in Q4. Revenue's up big, and that's why we saw the earnings print we just did. So yeah, there's no website. I mean, you could read the Stock Sharks newsletter. That's probably the best place to find underdogs because we're always talking about them. But yeah, there's no like you just gotta form your opinion. It's like how can what determines the home run derby winner? The guy who hits the most home runs, right? So it's like you just got to find those things. To touch on, I'll give you one more underrated stock that fits into the semiconductor theme, but they don't make chips, and they don't sell semiconductors. But what they do make are called superconductors, and superconductors are super important for data centers, which semiconductors all go into for the whole AI narrative. And that stock is AMSC, American Superconductor. So my story of AMSC is I found this company last year while I was in Florida reading about it. I said, well, this is an interesting story. I got to learn more. Bought the stock at $18. They reported earnings. Stock went up. I sold it way too early because the stock went from like where I sold it at 40 to like I think 80, 77 or something like that. It went very, very high. And I was like, man, what did I miss? Like, this is definitely a key component within the data center story. They reported earnings last quarter. Stock completely collapsed. They did an acquisition, a share offering, completely diluted their shareholders, which is great for me because I'm like, boom, stock fell 40%. This is an opportunity. So we actually bought that stock this week, AMSC. So that is the American Superconductor. We bought back into it. So that would be an underrated one that people just don't know of.
JR, Thank you so much, man, for taking the
No
time to come on
problem.
this episode. Like, for one, it's just really cool to hear different insights, right? Like you said, you can tell that you take the time to go and dig into the details and learn from different sources. Because I think the one thing you'll agree on is that the algorithm's not going to feed you the underrated stocks, right?
Yeah.
It's not going to be in the popular information sources. And that's the one thing I learned from you is that it looks like you have to dig into the details, find the the non-traditional sources of information to kind of learn from. That's a wrap for this episode. If you're new here, make sure to go check out our other 60 plus episodes. We cover everything from beginner investing basics to more advanced conversations like the one we had today. You can also follow Stock Sharks on Instagram by tapping the link in the description. And I also have a free investing class linked in the description if you want to learn how to actually get started with simple strategies, or if you just need a quick stock market refresher. Other than that, I hope you have a great rest of your day, and we'll catch you back in the next episode. Bye-bye.